5-star copies all. Go ahead. Message to observer. Alpha 3 rounds. AT delay in effect. 3 guns. Bravo 2 rounds. 2 guns. Smoke on effect.
Hey, what's up guys? This is Andrew from the Options Monitor community, home of the best investing educational resource on the internet. Thanks for taking the time out of your day to watch this video. If you're new to the channel or to the community, hit that like and subscribe button. You get notifications for all future videos, content, and our daily live streams. Following the market as we trade long calls, long puts on SPY, QQQ, SPX, SPY as well. In this video, we're going to be going over my trades from Friday, February 4th, 2022. Why that day in particular? Because that day in particular traded very predictable. How did I know it was predictable? Because I was utilizing the VIX. If you followed me before, if you watched my videos before, you know that the VIX plays a crucial part in my trading system. More so than any particular indicator or line or pattern that you can draw on your charts. Following the VIX, the volatility of the market, predicting the volatility of the market through analysis is the best way to set yourself up for success on your entries and both your exits. All right, so this is my chart setup for Friday, February 4th, 2022. If you followed me before or watch my live streams or my market live trading, you know that I usually trade with 3 charts stacked. Usually SPY is on top, NASDAQ is in the middle, and VIX is on the bottom. However, for the purpose of this video, because I want you to see the detail of the VIX, I've only got 2. SPY is on top, VIX is on the bottom. Up top here on SPY, I've got a couple of different indicators. Most of them are muted, but I've got the important ones that I usually use. And the top one, the most important one ever, is my custom SR pivot levels. And these are indicated by the green and red horizontal lines. You'll notice that some are brighter than others, R5, R3, R2, and S4. The reason why they are bright is because they are the strongest of all the pivot levels. Now, if you are in the server or if you haven't been in there before, I usually post this every single morning before 9 o'clock Eastern time. I post this in the OM analysis channel, which is where I post all my analysis, my live market analysis throughout the day. Not to give you, and the purpose of that is to give you not only play calling, but to give you play action live thoughts about the market as it dynamically changes. On this pre-market analysis, you see I've got the daily sentiment, any kind of thoughts, news events, things that we need, data that we need to be aware of, as well as the SR levels. Now, if you look under the resistance column there, you'll see there's a plus sign beside R5, R3, S2, and S4. The reason why the plus sign there is because those are the strongest pivot levels. All right, so setting up the situation, getting into it. First, what we had is jobs data. The jobs data came out in the pre-market right here, and you saw this big drawdown we had in pre-market conditions. Immediately bounced right about 20-something minutes before open, and the market went on a little bit of a buying relief spree. When the job data came out, we had that initial reaction there because people thought, all right, well, now that we've got good job data, the Fed might be a little bit more aggressive on some rate hikes, and they started price not in. That's for another video. So because we had a lot of volatility in the market, a lot of ups, a lot of downs, I was looking for the first play of the day. I didn't take one the first 20 or 30 minutes. Now remember, I'm still watching the NASDAQ. I'm still watching all my X sectors with my nice, robust, intentional watch list. And I think just on the price action that the price is going to go down before it goes back up. So I elected to take a put right here. Now, I posted my results about this on Reddit, and people are asking me, how did you know to take a put here? It looked like it was going to keep on going up. What kind of voodoo magic is that? And honestly, it's not voodoo magic. It's not even all that difficult. And I'm going to show you exactly how I found this put. I entered the put here because I saw, and I'm going to switch over to the 15-minute to show you what I saw. So this is the 15-minute chart. And as I saw the price action on SPY began to get some top wicks just at R3, because that's an R3. I knew it was very strong. It was going to be tough to break above that level. I saw the VIX was doing the exact opposite. They were having bottom wicks right here. Now, this is so important about the VIX. If you can find a reversal in price action to the VIX to the upside, you can anticipate the downward action on SPY. So I saw the bottom wicks coming here on VIX. You see the bottom wick, bottom wick, bottom wick, and then finally another bottom wick. When I started to see these bottom wicks, I switched back to the 5-minute chart here. I saw some more bottom wicks here, and then a little hammer candle. On that hammer candle, which you see, if you see the mark right here, is where I entered the put. My put initially went down a little bit. It was down in the red, I think 2 to 3, 4%, not much. Now, when I play reversal trades like this, a reversal trade is where you play it at the reversal point there. When I play a reversal trade, I play very tight stops, just in case I am wrong. I give myself the opportunity to be wrong without being blown out. So I place the trade, I put in a tight stop, a break-even stop, just about, a little bit less, give or take. Now, once that trade moves against me, I start moving that stop down, kind of like a manual trailing stop. So that's what I was waiting to do. I placed the trade. The trade went a little bit red. I was watching the VIX. Once we finally started having the VIX break up to the upside, I became very confident in the play, and the play, of course, kept dropping. Now, the first thing I was watching to take profits on is VWAP. We usually get some sort of manipulation of price at VWAP because a lot of traders, a lot of retail traders trade around VWAP indicator. And that's precisely what happened. We had a red candle, we had a little green just around VWAP, and then we fell on through all the way down to S2. Now, if you were in the community and you saw that I posted in the Patreon channel that there was a higher chance we would come down and touch S2 before going up, and that's precisely what happened. We fell down, we came down here, and then on the same action, if you watch the VIX come all the way down there, I started to see the top wicks on the VIX, the bottom wicks form here on the SPY. I knew that we were at a very strong level, which was S2. All those data points correlated together. It showed me that it's time for me to exit, and that's precisely what I did. I exited the call. I took February 7th, 4460 puts. It was a 3 DTE put. I got a fill at 23.20, and I exited the position at 32.30. So once the price bounced, I again was looking for an entry point, as we all do. There was some clear indication that the price was going to come back up here, but I knew R3 was coming. I wasn't quite positive if we were going to reject somewhere in this region and come back down. So I elected not to take a call here. I missed out on this play. Even though the VIX was very strong in the downward trend, the SPY had nice engulfing candles coming right up. It would have been a perfectly good time to enter some calls. I just elected not to take this position. I was watching this price action consolidate. However, the VIX was still trending down. If you notice, the VIX still had this nice downward trend, whereas the SPY still had this sideways, slightly uptrending, but for the most part, VIX was very much downward trending here. So that told me the price of SPY is going to start grinding upwards and then eventually release to the upside. For me, VIX is, the textbook definition of the VIX is the volatility index. However, I like to think of it as potential energy. Potential energy gets released into kinetic energy, which throws it up or down. It's our job to determine where the price is going to be directed, up or down. So with VIX being released to the downside, I had a high confidence that the SPY energy was going to be released to the upside. And what happened? It consolidated. I took a call right here on this candle right here. Why did I take a call there? Because the VIX, yes, it had been downtrending, but I finally got the release to the downside. We formed lower lows right here on that bottom. I put in a call, and now we started breaking above the R3, which is a very strong resistance. I put in a very tight stop to make sure we didn't get reversed, to make sure I didn't get blown out, and then I waited for it to release. We started releasing above R3. It started to go. When I started to see these big downward action engulfing red candles, I had high confidence I can make a play. And then I let it rage. I was hoping to get up to R5, which is the top line here. It didn't quite get there. I started seeing top wicks right here. I started to see the sideways choppy action of the VIX, so I elected go ahead and take that position off the table. I took February 4th, 4,500 calls at 11.50. I exited them at $19.80 for a 72% profit. After that play, back to the same old thing, looking for the next setup. We rallied up here just under R5, and now it's about lunchtime, which we kind of fizzle out and die out here. Not to mention, the VIX is lower than it's been in a while, 23, 22, give or take. So the price action started going sideways. I wasn't going to fight this chop. I wanted to make sure I play the break up or break down, either one. And honestly, I had no idea where it was going to go. I've already got 2 winning trades. It's Friday afternoon. The market has a propensity to move big on Friday afternoons. So I don't want to give back profits taking a silly play. So I wanted to be very, very patient because patience pays. So the price action is going sideways here. Now, my first indication that we were going to break higher here is that we kept getting higher and higher lows. It kept bouncing it up with smaller and smaller seller interaction. The selling volume kept dying off here. The lows started getting buying up quicker and quicker. And then right here, and watching the VIX is going sideways and sideways. We started finally forming a little downtrend. When we broke down right here on this red candle is when I entered the next call. When VIX finally broke down right here, which you see the finally gave way, I entered February 4th, 45.20 calls. I got a fill of $11.80 each. Now, once again, although I had a high confidence that the VIX was breaking down, SPY was going to break above R5, I wasn't quite sure. So still, when I'm playing a breakout like this, I want to keep a tight stop. I kept a tight stop. Once it releases, I removed that stop or extended that stop and let this baby eat. All I was doing at this point, because of the breakout above R5, I knew a lot of potential energy was released to the upside. We're getting a lot of momentum over R5, and the VIX continued to fall. When the VIX continued to fall and then kind of died out here with this little top wick and then followed on with a green and a top wick green candle right here with a red, I elected to remove the call, exiting the call here. I exited at $18, which was a 52.5% profit. That call in particular, I could have played blind of SPY. You could have shut off my SPY chart, and I just would have played a blind on the VIX. The VIX was very much flushing to the downside. The second I saw a green and a sideways action, I elected to close out that position for a 52% profit. So I took one more play this day. I didn't buy a call. I actually wrote a call credit spread. If you don't know what call credit spreads are or any kind of spreads are, please look at my other videos. They have this thumbnail to get started on there. It's basically a how-to, an intro video on how to trade credit spreads. And even if you aren't interested in trading credit spreads, I highly encourage you to at least learn about it, because learning how to write premium or trade spreads makes you a better trader, even if you only intend to just play long calls, long puts. So I saw the VIX had bottomed out. I exited my prior call, the 45-20 calls, and I watched the price action start to top wick. I started to see the NASDAQ start to trickle off, which is not on the screen. And then I started to see the VIX start to base. When I saw the big final red top wick start to form, I elected to enter a 45.70, 45.90 call credit spread. That means I wrote a call at 45.70 and purchased a call at 45.90. And I did that simultaneously at the same time. That's called a call credit spread. If you're not versed in spreads, all that means is I need the price of SPX to close below 45.70 in order for me to be profitable. Normally, this is a very risky play at the end of the day when the SPX at the time was already 45.20, 45.30. It was not that far for SPX to go in the last minute of the day, and I could get blown out. However, because of the way the VIX was acting, its high upwards action in the last few minutes of the day, I was anticipating I could at least scalp a call credit spread to the downside, make a good 30-40% as this is coming down, and make a good play. Now, once we broke through at R5, I had high confidence it was going to continue to go because of the strength of R5, because of this upward strength of the VIX. I elected to hold this position. Eventually, it expired worthless. I had 100% profit because you wanted to expire worthless on call credit spreads, and it made for a very successful day. 4 trades, 4 big wins, all 50% or more. A great way to close out a phenomenal week. That Friday in this video fully captures how important it is to monitor the VIX. A lot of these trades were 90% of my thesis was based on the movement of the VIX. It doesn't always work out that way. It's not always that clean cut, but a lot of the times it is. And it gives you a huge edge that other traders do not actually capture. The reason why I wanted to make this video is, like I said, I posted this on Reddit. I posted these results on Twitter, on all my social media. And the most common question was, how did you see this? It was going against the EMAs. It wasn't showing up on my radar. I didn't see the movement. How did you catch these movements? Because I had all 4 of these movements were on the money. I had 4 entries perfect, 4 exits perfect, and it's not brain surgery. It's not rocket surgery. All it is monitoring the conditions of the market, monitoring the NASDAQ, and most importantly, monitoring the VIX. Anyway, I hope you all enjoyed this video, just a little bit about monitoring the VIX and the market awareness and how important it is to trading. If you have any questions, please come over and visit the Discord. The link is down in the description of the video. I'll be happy to answer any questions you have about this video or any other video for that matter that I have on my YouTube channel. Please hit that like and subscribe button so you can get notifications for all future content, as well as my daily market live streams where we trade together and make money together. If you've ever been interested in learning from an actual Wall Street trader, somebody who has managed hundreds of millions of dollars of funds and who has an incredible 35-year track record trading the market, come over and join Tier 4. $125 a month. You'll make your money back in one single day and be able to deliver consistent profits day after day, week after week, month after month. That's Tier 4 Veteran. It's on the Patreon channel. Come hang out with us, learn from us, and make some money with us. Anyway, that's all I got for you. Thanks for hanging out. This is Andrew with the Options Millionaire Community, the internet's #1 investing educational resource. I'm out.